of the Senior Group here in Chicago. I'm killing it. I got a special guest from today, Scott Shellady, and his Twitter account is @SoapboxScott. Scott, thanks so much for coming in today. You know, I want to bring you into his wheelhouse, the commodity space, but first and foremost, I'd like to discuss Italy. We've talked about Italy, we've talked about France, but I really, I think Italy's in the rear view mirror here, Scott. And I really want to talk about France and this AAA rating. Are they better than the U.S. government? What's your thoughts on the AAA rating and where'd they go?
Well, I think the ratings agencies are 100% political, and I'm not quite sure that we can even look at those things as a harbinger of anything going forward. And I think with France in the rear, with Italy in the rearview mirror and France on the forefront, I think what we really have to worry about today is Spain. Now, this contagion is going to continue to go on, and Jeff, I've got a European passport.
Right.
That pass, I'm not sure what that passport.
Good-looking European passport. Look at this.
And I'm not sure what that European passport is going to look like in 12 months' time, because I definitely think that landscape is going to change. And how is that going to affect everything in the U.S. and how is China going to affect the U.S.? So with the contagion we've going on right now in Europe, that's not going to end. It's going to be here to stay, and it's going to move, say, from Italy to now I think it's going to be Spain. And then with what we've got going on in France, France is too big to save. It's got to be there. So we've got a very tumultuous 6 months coming up here where I think it's anybody's guess what happens in the long run.
No, for sure. To add on to that, before we hopped on camera here, Scott and I were talking, you know, this $83 billion that they're rushing in Italy to implement, this austerity they're rushing to implement, that's fully negated with this 10-year above 7%. So due to the fact, you know, that we're so focused on this austerity, this new government, but the big picture is there's zero growth over there. We saw the GDP in the Eurozone today. It's kind of flat to sluggish. Where are we going?
I think it's flat to negative, and I also think that let's rewind to Greece.
Sure.
You know, Greece has only really been growing at, say, an average of 2.5%. Some of the austerity measures and the money we've lent them have got some riders on it that they have to grow at, say, 10% for the next 30 years to pay the money back. So without growth and with the growth assumptions that we're making, it's a house of cards, and just when it falls is anybody's guess.
Right, and then on the ECB, they're buying bonds over there. And clearly we saw the template in Greece, that 50% haircut, which will probably end up being a little bit more severe than that. But they're buying these bonds in Italy, in Portugal, in Spain, and literally they're walking into a trade that's a 50% loser initially. I mean, it's amazing to see how does Merkel control social situations. Do you have any proposal, any silver bullet? Is there a golden goose? Because right now we're coming up with a lame duck.
Well, I think that the only thing out there for the general public to do is to continue to stay short the euro. You're going to have better times to probably short it than today, but going forward, sometimes we've got a psychological problem as traders and as a general public managing money. When we have something on the horizon which is just too big and ugly to think about the ramifications of it actually happening, we ignore it. And I think right now we're ignoring that with the way the euro is trading. So I think ultimately that euro will trade down to 120, maybe 110, and who knows after that. But it's not going to be what it is today in 12 months' time.
Wow, it's awesome. Scott, special treat having you on the CMZ table. One last question. You know, there are concerns about inflation in Europe. Obviously, we saw the ECB, you know, Super Mario, he came in and cut it 25 basis points initially. There's talk about a 50 basis point. Is there a concern about inflation, or is there just a change in relative prices for commodities across the globe?
Well, I think what our concern is going forward is the U.S., commodities included. I think we're entering actually a deflationary cycle. I think that the way our money rates are going to start to trade are going to emulate what's going on in Japan and what's happened in Japan, or what we've seen in our savings rate as of late. So I think going forward, I think we have a deflationary risk. That's the real worry going. We had some guys get in front of that inflation trade, and they really got hurt too early. Right. So I think that those guys have been bitten once, and twice they'll be too shy here. And I think that going forward, I'm really more concerned about a deflationary cycle, and I think the government's really concerned about that.
For sure, for sure. Well, you heard it here first on the CMZ. Follow Scott @SoapboxScott on Twitter. If you need any commodities executed in the pits here behind me, he's the man to talk to. From the CME, oh, one thing you have to remember, be the hammer.
Not the nail.
Yeah, baby.